Again, our people, Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week, and we break down some of the analysis we have performed. This is great for those who are wanting to learn our strategy, and it's also good for those who are looking to highlight some specific zones and areas that you could look to potentially get involved from. Now, if you guys have any questions with regards to the analysis we go through today or my bias itself, please leave them in the comments below. And if you do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, there's a few pairs that we're going to go over in today's video. We're going to start with the Great British Pound to the US dollar, and then we're going to head over to 3 or 4 of the pairs that I've got my eye on and that I feel could deliver us with some brilliant trading opportunities in the week of the 5th of May. So as you can see, we do have the Great British Pound to the US dollar market on screen at the moment. We have been delivered with a higher time frame break of structure to the downside. This suggests bearish structure moving forward and a reversal in trend. As you can see, price was very much bullish. It traded us up and into a supply zone. Supply was introduced. What happens is supply is introduced, demand is offloaded. So people that have bought in from these areas of demand have closed their positions in and around this supply zone. Sellers have been introduced into the market, and that's what's given us that break of structure. This is a change of character, and as I say, it's a flip between the supply and demand balance. Supply is now in control of the market rather than demand. Now, moving forward, how do we feel this market is going to play out? Well, I'm wanting to see price put in a corrective wave, trading us higher up and into another area of supply where the market itself can grab more supply in the market in order to encourage price to move lower. So with supply outweighing the demand, we can expect that this market continues to trade us in a bearish way. We therefore want to be looking for those bearish opportunities, hence why I've marked the supply zone out here on the 4-hour time frames. So what I want you guys to do is mark this zone out for yourself if you haven't done already, and leave an alert set just below. Once price trades up and into this zone, we want to see price break structure to the downside. This gives us the confirmation that this corrective wave here has finished and the next impulsive wave to the downside is ready to take place. This just gives us the confirmation parameters that we need in order to place our position. But ultimately, that's our analysis for the Great British Pound to the US dollar. Simply looking for short opportunities. I just want to see price trade into an area of supply, give us the confirmation to enter, and then we can look to get involved in this market. Okay, now heading over to the Euro US dollar market. Again, price is within a corrective phase, trading us higher at the moment. However, I am wanting to see the next bearish run. Why am I expecting bearishness in this market? Well, we've had multiple penetrations of supply zones, and we've had multiple breaks of structure to the downside. These are things that suggest longer term bearishness in this market, hence why my bias is to go short. You can see here we were delivered with a higher time frame break of structure, this giving us the confirmation that supply is outweighing demand. And what we are seeing now, or what we have seen should I say, is price trade us in a clear bearish way. You can see that we have a high followed by a lower high, a low followed by a lower low. This is the laws of bearishness. I am wanting to see price trading up and into this area of supply for us to set that new lower high before price goes on to set a new lower low. Now, on the off chance that these two areas of interest are absorbed, we have got this area here as well, which could be a key area of interest. Now, you may be wondering, well, is that not breaking the last protected high? Well, if price goes on to trade us down like this, which it has done, and then trade us up like this, but then what follows is a new lower low, you can see that we are still following the laws of bearish structure. And what this entire thing here would be the last impulsive wave. What's traded us all the way up is the corrective wave, and then what trades us down to create a new lower low is the impulsive wave. So it's important that we don't get caught up with the fractal nature of the structure in a market. So these 3 areas in mind are very important to us, as these could be key areas to look to go short from. Now what I'll do is I'll actually mark this area out for you all, just so you guys can go ahead and apply this to your own charts, as this will be another area of interest on the off chance that price does in fact trade us through the two that we have marked out here. So go ahead and mark these out for yourself. They are on the 1 hour time frames. As always, wait for price to trade in, give us the confirmation we need before we place any short positions in this market. But to go short in the Euro USD would be a sensible decision, just with us having so much confirmation that this market is short overall. Okay, now moving over to the Australian dollar to the US dollar. This market is slightly different. With the two previous markets being Great British Pound to the US dollar, followed by Euro US dollar, both pairs had a quote currency of the US dollar, okay? And we wanted to see price correct initially, so traders higher initially before a down move, which would suggest that there is strength in the US dollar. Now with this pair, I'm actually wanting to see longer term bullishness, which would suggest weakness in the US dollar, but strength in the Australian dollar. So there's a bit of an anomaly there. The reason why is because we've had this breakup structure here. We've had price trade down and into a demand zone, and we've had price continue to respect these areas of demand moving forward. What we've also seen here as well is another fractal breakup structure to the upside, which again would suggest price is ready to put in the next impulsive wave, trading us higher on the higher time frames. So we can mark that out as well here. All we want to see now is for price to trade down and into a valid area of interest, giving us the ability to get involved in this market with a refined entry. There's an area here that I'm going to mark out for you all. I'll put the increments on screen. This could be an area that we could look to go long in this market from. So 0.6517, 0.6544. Price could quite easily trade us down into this, absorb more demand before a continuation higher, or it could take us as low as this point. As you can see, we have an area of demand here before price trades us higher. So we can mark this out as well for you all, just so you guys can mark that out for yourself. Now, you might wonder, why is it that areas of demand, okay, are areas that are red, you know, selling areas? Now, the reason for this, okay, is because you've got to understand that when price trades us down and into these areas, sell orders are actually removed from the market. So the sells that are stuck within price here, that have been left unmitigated, are actually closed at entry. Now, as you can imagine, if we are offloading sell positions in what looks to be a bullish market, that's just going to increase the strength of a bullish market, right? Because we are removing sell orders and introducing buy orders from these areas in price. So that's why we see these strong moves to the upside. As you can see, price is traded down. It's cleared this gap here, and it's traded us up very hawkish in the sense that sell orders have been removed. So these sell orders here have been removed from the market. People have profited from this corrective wave. Sell orders have also been removed from the fair value gap, and buy orders have actually been introduced. So this gives us that hawkish move to the upside. And the opposite applies when we look at a bearish market and we look at these areas of green, bullish buy candles in a large bearish swing to the downside. So that just is to give a bit of context and a greater understanding on these unmitigated areas in price and why order blocks are so powerful and so important to us and our strategy. But ultimately, I am looking to go long in this market. I want to see price trade down into one or two zones, give us that flip again, preferably a fractal breaker structure, and then we can obviously look to get involved in this market in some long positions. Now, in terms of a take profit target, I don't think we have one in mind. To be completely honest with you, I'm expecting a large move to the upside from here on out. So it'll be interesting to see how price plays. But if you wanted to have an area in mind for a take profit target, just below this high here, around the 0.7877 area would be a good point. Because by price trading up to this point, and if it surpasses that area, that would suggest longer term bullishness. Okay, so I believe price could trade us up and into that area before any kind of retracement. So we're looking at a large amount of pips here that we could capitalize on, assuming we get in at a good point and assuming that our trade plays out correctly. But that's my analysis for the Australian dollar to the US dollar pair. Now, the final market I'm going to touch base on, which I'm going to touch base on very quickly, is the gold market. I've just done a case study video on this. Price has traded down and into this zone, which is what we expected. I do now want to see price put in a corrective wave to trade us up and into this area of supply before we see a continuation in bearishness. I had this zone marked out on the case study video. You could see that price does trade bearish from this point and trade us down and into this area of demand that I've got marked. If you guys haven't watched the case study video, go ahead and watch it because you'll see that price has played out perfectly. I think on the daily, it shows itself a little bit better. Yep. I marked out this this hidden order block. I wanted to see price trade in and then trade us down. That's exactly what price has done. As you can see, we go down on the lower time frames. Price traded up, price traded us down. So price played out perfectly. And this swing here is about 300 pips. So you guys could have capitalized really nicely on this market. Now, moving forward, as I say, I want to see price trade up and into this area of supply before we see a continuation in bearishness. Now, the reason why I want to see a continuation in bearishness is because I feel that this corrective wave to the downside is not yet finished. There are a few areas in mind that I would like to see price trade down and into before we see the next bull run. As we know, this is a bullish market, so we should be looking for bullish opportunities overall. However, price is definitely within a corrective phase, as we've had multiple pieces of confluence to suggest so. And with every up comes a down. And this market, as I say, as a whole, is a bullish one. With it being a precious metal, it's always going to hold value. And I think the price of gold is only going to increase, especially when currencies themselves at the moment are quite scarce. And there is some kind of conflict with currencies at the moment and everything that's going on in the world. So I think worst case scenario, if the whole world was to go to pot and economies were to crash, we would always be backed on gold. So that's my thoughts on the gold US dollar market. And this is how I feel price will play out over the course of the next week or so. That's actually going to summarize this Sunday sessions video. I hope you guys have enjoyed. I hope you guys have learned a thing or two about order blocks and specific areas and price action, things of that nature. As I said to you guys at the start of the video, if you have any questions, any queries with regards to the analysis we've gone through, leave them in the comments below. More than happy to answer any questions. And if you aren't involved in the VIP chat or the Learning Lounge, get yourself involved. Links are in the description. If you're looking for a broker to trade with, a broker to work with, we are actually affiliated and we work closely with Monaxa. I have a brilliant relationship with the guys over there. So if you are looking for a good broker to work with, they are the people for you. Now, with all that being said, I hope you guys have enjoyed and I'll catch you all in the next Sunday sessions video.